Hundreds of money managers from around the world have come here to San Francisco to talk about sustainable and responsible investing this week. Investors are here to discuss wide-ranging investment concerns from gun makers to fossil fuels to fair labor. We'll ask 3 experts to share their insights about how companies are responding to some of the key environmental and social concerns of our day. We'll also discuss recent innovations changing the landscape and where millennials are putting their money. Welcome to the Responsible Investing Masterclass. Thank you all for joining. So let's go ahead and dive in. There's a lot of different terms and definitions when it comes to the ESG investing landscape. What do we mean by sustainable investment strategies? Mary Jane?
Oh, sure. So sustainable investment strategies are very much similar to the sound of the term. It's about sustainable investing. So the investments that we're investing in are meant to grow and continue to endure as very good investments financially, but also to support a sustainable society. So a sustainable investing into future generations.
So are there places you find your clients most confused when it comes to these terms, or the terms related to ESG investing?
I would just add that, so ClearBridge, last year was our 30th year of ESG investing at the firm. And we've always taken this as an investment approach, very much at the fundamental level. This is about analysis, it's about risk mitigation, it's about stock selection and long-term performance. But I think it's also important as we talk about ethical investing and values that we don't necessarily put those to the side, and not that any of us are saying that, but that we need to still keep an eye on that. So something that's unsustainable from an investment perspective, perhaps tobacco as an example, many would think so, is not so much just uneconomic, but it's important to, as a society, to also note that if this is harming people's lives, is this something we want to support with our investment dollars? So we try not to put the morals or values over our investment process, but we know we can't forget those core values as part of our clients, but also for society.
And I think those core values are what attracts investors, because, I mean, investing as a whole is very emotional. I mean, emotions do come into play. So being able to consider these type of things, gender pay and what you mentioned, I think it goes a long way.
Well, it's interesting because investment professionals are supposed to be very objective and very long-term focused and not get rattled when the market has volatility or when PE goes up or when valuations are less attractive. But we are the professionals that are supposed to help our clients, and the clients are the ones who are going to have this reaction. And it's, in a sense, it's hard to bifurcate your sense of values and your support of society and next generation from your investments that are meant to go out into the future. So we see them very much aligned.
Okay, and that takes me to the next question. When it comes to impact-driven strategies, what are some common goals that you see amongst investors?
The idea of impact investing had in the past been associated in many ways with very high impact but low return. So there's a trade-off for the high impact but low return. I think we see impact investing being much more broad and including multiple asset classes and possibility for impact as well as above market rate return. And so you don't have to have this idea that impact investing is about giving up return. It's about very much long-term investing across asset classes and maximizing or leveraging your investment assets to make change where it's appropriate, where it's material, and for the long term. And I was recently listening to one of the CIOs of a pension fund who said, we are not impact investors, this is not what we do. And I think her thinking was that she's a fiduciary and that impact had that trade-off. And I think many of us, particularly in the investment community, but more so with the asset owners, are seeing this as a way to have both, to have long-term investment returns, but also to have an impact. Now, does the impact drive your stock selection or your investment process? It shouldn't necessarily, but it's an outcome and it's a derivative. So that's how we see it.
And it shows sustainability in the long run.
That's right, that's right.
How else have you seen the mindset of investors evolve? Do you believe that there's perhaps more saturation of these strategies in the marketplace today?
The awareness or the saturation in terms of thinking about ESG or impact investing has increased amongst investors today. And that did not happen instantly. I remember Chris and I, early days, 10, 15, 20 years ago, have been in places where impact investing or ESG investing was not known at all, and we had to explain it from the very, very beginning. But now, with many historical studies on performance, many of the CIOs and investment committees starting to look into what is this and asking questions, many of the consultants coming up to speed and knowing about the products and knowing about the processes and which managers are doing what, understanding the different asset classes of active and passive, fixed income and equities alternatives. All that information that has been swelling up has now come to a point where it's very common to talk about impact investing. You don't have to explain it from the beginning. So one caveat I think many of us in the industry will say is that please do your due diligence as well as you ever would for any product. Okay. So because it has a label of ESG or impact investing or sustainable investing, you may say, this is something that my client wants, and so I'm going to go for the label. You have to look under the hood. You have to understand the process, the quality of the investment management team, the performance history, what the risk characteristics are, and all that is equally as important, if not more important in some ways, in terms of understanding what these products are.
Okay, so for my next question, I'm really interested in knowing what millennials are doing in this space. Millennials seem to have investing strategies that are very different than a generation ago, and so give me an idea of what millennials are doing.
It's also interesting to see the influence that millennials have had in many ways. One is with financial advisors. So if you speak to many of the financial advisors at all the major wirehouses, they all are now starting to say, I need to understand what ESG investing is because our millennial clients are the next generation of my clients I've had as the grandparents, the parents, and now the kids. I want to be attuned to what's of interest to them and keep them as our client. But then millennials are also very electronic, very instantaneous, so they like to do everything on their phones. They like to get very involved and do a lot of their own research. So for advisors and consultants, it's a little bit of a different type of client situation where the advisor used to be the one to educate the client. And in this case, the millennials are very much well informed and are actually being very vocal and seeking out impact. So a number of the platforms that we spoke to said that they are adding product partly because of the millennials and of the survey responses, that the demand has increased, and that they are the ones who are going to address the future, it's going to impact them the most.
Okay, let's sort of delve deeper into ESG factors. When discussing ESG factors, what are some of the responses you're hearing from companies? And give me an idea of how that dialogue goes.
Yeah, so we're fundamental investors and we're active long-term investors. So when we meet with companies, it's typically our sector analyst or portfolio analyst or portfolio manager. And so for myself as a portfolio manager, when I'm speaking to the CEO of a company that we own in the portfolio or we're thinking to own, it's very much a conversation about the investment thesis, about risk, reward, and valuation, but also about strategy and about growth and where they plan to grow and how they plan to grow. And so I think the company's responses have been very positive over the decades because they know that we're not asking these questions to try to get them or to put them in an uncomfortable position. We're asking these questions very much in the mindset of a long-term share owner, and we want them to do well, and we want them to improve. So it's kind of we're on the same page in that sense. And then we aggregate our shares where we own company shares for very long periods of time, and a lot of them, so typically a top 10 share owner of the stocks that we own. And so management knows our thinking, and we know their thinking, so it's very helpful to do these engagements. And we have CEOs who will come in and say, you know, you're one of the few firms or investors who will ask us about, you know, recycling or ask us about water usage or conservation and where we can actually capture cost savings. Like those types of conversations were usually put to the side with other investors, but for us it always comes up when it's material and it's relevant to the conversation. And this is where the face-to-face meetings or actual meetings with the company management makes a lot of sense, because what you see on the website and how good the company is in terms of greenwashing in some cases, you can actually kind of really vet that out when you have the face-to-face meeting. So the conversations you have with management will really give you a sense of where the company is moving, what the governance practices are, and what's a priority for the company versus just looking at their sustainability report. What's also interesting is that it sounds like, you know, we want to get along, we have very good conversations, we're very productive and progressive in moving things along, but there are also times where companies are not up to speed on what is taking place sustainably. So internally, our fundamental analysts will assign an internal ESG rating, and the rating is a reflection for the portfolio managers to see how the company is performing on sustainability in addition to excellent financial characteristics. And what we've seen is there are companies that are in early stages, so they haven't acknowledged. So we've done this for a long time. In the early days, companies were very resistant. You'd ask about sustainability and they would want to change the subject. But now they're much more involved in asking for information and advice. But there are still companies today that, you know, when you think about the Russell 3000, you think about lots of the leadership companies, those are the companies we wouldn't expect to have a challenge, but there are still other companies that are moving along. So in other words, our work is not done. There are a lot of companies that are very attractive from an investment standpoint that we believe could be compelling investments, but we need to continue to work with them in terms of their sustainability profile.
But are there any other best practices that you would recommend when it comes to this type of discussion and engaging with companies?
We like to think of it as kind of like a mosaic process where our analysts will take the input of directly discussing with management. We should talk to management and understand how they're thinking. We should read everything we can from outside or external views as well. But we should, say for example, a manufacturer. We talk to the manufacturer, we try to get the understanding of the industry, of understanding of macro, of global, of political policy, of regulation, so on and so forth. But we should also talk to the suppliers, we should also talk to the employees, we should also talk to different parts of the company. And by putting all those parts and pieces of information together, it helps the analyst to come up with a more thorough evaluation of the company. So the company management is certainly an important part of it, but there's lots of other information that can be brought in.
All right, well, let's move on to innovations. The ESG space has really matured as investors have become more interested in tailoring their investments to these goals. Where have you seen recent innovations that have most reshaped the space?
It's also interesting in terms of innovation as far as how companies are trying to grow with new challenges, with different governmental regimes, different policies. And so when we think of companies like Becton Dickinson, which is a medical equipment, life sciences, healthcare company that we own, they have been one of the key companies to save lives in the sense that they manufacture disposable syringes, and the syringes will deliver, it's a mechanism to deliver life-saving vaccines as well as medicines that patients from around the world have. But it's very low cost, so it gives the accessibility a much broader net as opposed to a very high cost mechanism. And so that ability to affect emerging markets around the world as well as developed markets on addressing something as simple as medicine or vaccine delivery is one way that we've seen Becton being able to continue to maintain its very large market share, but also continue to grow. Another company that comes to mind is Visa, which is, we all know, is a financial services IT company in a sense. And they have been able to increase financial inclusion. And our analyst who covers Visa likes to talk about how the company has been able to use this electronic debit and credit system so that through your phone, you can actually make payments, you can borrow money, you can do a lot more transactions, you can take a payment. So for many of the unbanked or underserved in terms of typical checking or savings accounts or credit standing scores, this helps them to have access to the capital markets in a way that they normally wouldn't. So that's another way to grow, that it's something that our analyst points out as a very big growth area. So innovation in terms of growth and how they're going to grow, which also has an impact.
And do you find that this helps to break down sort of how complex the subject can be when you present data, when you're saying, you know, this is how sort of the domino effect of your investment, it puts an investor at ease, right? Because I almost feel like ESG investing itself is a good idea, but it also can be very overwhelming for an investor. I mean, who doesn't want to save water? But really, what are the impacts and really what's happening?
Right.
You know?
Right. Yep.
I think that's also where reporting is helpful. So for many of our clients, they also, like, they want to see a financial statement that tells them how they did in terms of quarter-by-quarter performance with the stocks that they own in the portfolio. They also like to know what exactly is taking place. We talked about measurement earlier with each of the stocks that are in the portfolio. And then also understanding what the issues are, understanding what the value proposition was, understanding how it contributes to future cash flows. These are ways that you can, as managers, we can communicate at another level for our clients, which I think is helpful.
what about the evolution of sectors that were considered almost no-go zones to ESG-minded folks? Let's discuss that a little bit.
I think we also just have to be very mindful and deliberate in how we think about what you mentioned, no-go zones. So, so for example, we try to be fairly practical in our portfolios in the sense that we know that if we talk about energy or fossil fuel divestment, energy is not going to go away anytime soon. It is still a very big part of our global economy or infrastructure. While energy is proceeding, we can support other renewable energy sources, other technologies, and we continue to have that track along with energy. I don't know if we would necessarily say we need to exclude or divest of fossil fuels or energy as a term like that, because when we think of what the carbon impact is or the environmental impact of companies across the sectors, energy is one, and it's highly intensive in many ways, as well as coal and materials, and that's the effect you can see in certain utilities. But across sectors, there are companies that are in IT or in industrials where if you don't do a proper evaluation, you may think, oh, I'm clean because it's not energy, but you have to do this deliberate process across all of your analysis.
Yeah.
So as bottom-up investors, rather than say we wouldn't invest in fossil fuels or divest from energy, we would say if we see an interesting opportunity and like a high bar that it has met our sustainability and our investment needs, that this is a company that we would feel confident to put our clients' money in for now, but we continue to monitor it. But that said, we are very mindful of the carbon footprint, and we do think about that. But then there are also other issues with how to measure carbon footprint. And this could be another whole discussion of carbon footprinting. But I don't think that's the simple solution, is to get the carbon footprint and then we're done with the portfolio. Because then what do you do when you have the carbon footprint? Does it cause you to sell certain things because of the high carbon footprint, or not look into certain industries? Or do you try to take it in a more of a method approach where I don't know if we've had a lot of discussions in our industry, and the process and the approach of how to measure carbon is not as straightforward as one would think. The beverage company, carbonated soft drinks, high sugar soft drinks, so then what is the healthier option in terms of diversifying your product mix? So many would think water is the healthier option, but water has challenges in and of itself. So if water is the healthiest beverage that a for-profit beverage company can produce, how do they continually access and support and conserve water so that that main ingredient is available for them? And then how do you price it? Should water be priced in a way that no one can afford to buy water, or should water be priced in a way that shows that it is a commodity of value that we should all not take for granted?
Let's move on to portfolio construction. How should responsible investing be viewed generally within the context of a larger portfolio?
So from a client perspective, what would they do with their total portfolio and asset allocation within their pool of assets? And I would say also on the other side, and from the asset management perspective, you might say, at first I thought your question was, should an asset management firm have one product that is the sustainable, and then what about the rest of the equities or the investments that the firm is managing? And our view is that if we're going through this process, we've been doing this for decades, we have reconciled and made the case for ourselves as well as for our clients that looking at these material factors that are very long-term in nature but also short-term can help our decision-making and can help the performance overall over long periods of time. And so if we're doing that, why would we only do it for one group of clients or one product? If we think this process makes sense and it's something that we believe adds value, then we think we should do it across the whole firm's assets, is what our firm has done, is we're trying to do it across all firm assets, regardless if the client has indicated this is an ESG approach. This is our fundamental process.
And what methods can investors use to identify companies to include in a portfolio?
So we're a fundamental investor. We're bottom up. We very much look at this whole process as how to identify the best investments for our clients and what do we need to get to that point. So a while ago, we decided that all of our financial analysts who are responsible for the financial or fundamental coverage will also be the ESG analyst. We don't think, for our firm, the process is not good to be separated. We prefer it to be integrated. Mm-hmm. And as the analyst who covers industrials for 30 years, he really knows his companies, or he really knows where improvements can be made in terms of whether it's gender diversity in the labor pool or management team. our analyst who covers restaurants and discretionary absolutely has very in-depth knowledge about restaurants, retailers, power manufacturers, but he also spends a lot of time thinking about the bigger thematic issues as well as what is material versus not material. For each sector, our analysts will think about what are the key drivers for the long term, but also have ownership of that idea, of that thinking, of the fundamental analysis, and then take ownership of the engagement so that when we're thinking of how our companies are performing, we can go to the individual expert of or coverage of that company, the sector analyst or the portfolio analyst, and it's not necessarily these are a good basket of companies. It's very much bottom-up driven, but also with some thematic.
Going forward, what do you think are the most key ESG issues for clients and consultants?
I would say for us, when we hear from clients and consultants, we've always heard from them. We don't think we'll ever stop hearing this from them, is that it's all about performance as well. So if we don't, at the end of the day, if we don't perform, then all this effort and all this research, what compels a client to come to us as an active manager, as a long-term investor with an average holding period of 7+ years in our portfolios, to stay with us as compared to all the other options in the marketplace. So our goal is to outperform the bench and to keep our clients, to keep their trust and to be their manager and to make sure that we're investing in their best interest. And so all of our work that we're talking about today and all the sustainability, it's so, so important, but we have to perform. And it's not sustainable if we don't perform. So that's a very big part of all of our work. What I was going to say also is our clients are asking about many of the things that both of my fellow panelists have noted, and diversity is absolutely gender diversity and diversity of thinking and diversity and innovation and all the metrics that we talked about. It's amazing that there's so much information that now we need our companies to do something about it and find and hire the right talent. But I would also say what's interesting for us is what our analysts are thinking are emerging and something that they think that is important to our clients as well. And our analysts are focused on very long-term and short-term. And so one, for example, would be the opioid crisis. And that is, it's scary because it's actually a silent, very fast, quickly developing tragic situation that's happening around the country. It doesn't matter your income level, it doesn't matter your gender, it doesn't matter your career. It's happening to so many people. And so our healthcare analysts, our insurance analysts, and our industrials and materials analysts are all thinking this is something that they have to watch. And to the extent that they can engage our companies and let them know as investors this is a concern or a risk, but also the companies themselves are doing the responsible action to prevent this, this pandemic. This is something that's also important. Another is access to medicines. As the world grows, as the number of people out there are increasing and population is increasing, how are we going to address all the medical needs? And so another area that our analysts thinking is access to medicine, the ability to medicate anyone who needs it, regardless of pricing. And then another one is data security. And I know we all know that data security is not new, but it is growing. We think of IT and the environment, and we think the amount of data or global computing that's hitting the global computing world. Or if you think in the last 2 years, 90% of all global data has been posted to the cloud. That's a lot of data that's out there, and it's only going to increase. So how do we ensure that our security, our privacy is being taken care of? So all of our analysts, whether in financial services, retailing, and banking, and so on, are thinking that this is a major issue that they are focusing on. And many of our clients have given us feedback that these areas that our analysts have identified are also areas that are of interest to them.